Nigerian entrepreneur Buchi Okoro believes that recent regulatory moves signal support for crypto in Nigeria, which could lead to broader adoption of digital assets in the country. Quidax, the cryptocurrency exchange founded by Nigerians, has received approval from Nigerian authorities despite clampdowns on other crypto exchanges operating within the country's borders. Okoro suggests that the government should create a legal framework that is clear about crypto trading and investing while also giving space for crypto businesses to launch their products and services. He further suggests collaboration between regulators and businesses in order to defeat bad actors who might use crypto for illicit purposes, such as money laundering or financing terrorism. In general, people like him propose African economies have a high potential for digital asset adoption. For example, South Africa has been driving growth in crypto through proactive regulations and expanding platforms like VALR. The cost of compliance for crypto exchanges is also on the rise as regulatory clarity emerges. Several emerging economies in Africa are viewed as promising hubs for digital asset adoption. South Africa's Financial Sector Conduct Authority, FSCA, recently granted new crypto asset service provider, CASP, licenses to VALR, who has obtained Category 1 and 2 CASP licenses from the FSCA. The South African cryptocurrency market is expected to reach $332.9 million by 2028, with a compound annual growth rate of 7.86%. In somewhat related news, we turn to a crypto story involving Elon Musk, who is originally from South Africa. A federal judge dismissed a $258 billion lawsuit against Elon Musk and Tesla for alleged Dogecoin price manipulation, stating that Musk's statements about Dogecoin were aspirational and puffery, and not factual claims that reasonable investors would rely on. The plaintiffs argued that Musk's public comments misled investors and led to significant financial losses, seeking $86 billion in damages, with a request for triple damages bringing the total to $258 billion. Attorneys for the plaintiffs expressed disappointment with the ruling and plan to appeal the decision.